Good morning, everyone, and welcome to the European crossover webinar. And we're into the new month of April. We had some good news coming out of the China data, which has given us a boost in the Aussie dollar. You can see that pushing up highs. You can see the dollar yen stretch came into an area that we were looking at already on our, if you checked out my basic technical analysis, we're looking right here. It came right into that 21 area here, which is the 61%. But we do believe there's a extra stretch may be possible. The euro is still close to its lows, but trying to pick itself up off right now at the moment. And let's take a look here. And cable's working a bit higher here. We'll get to what the news is on that. But as I told you, with the new review of the European crossover webinar, we're going to have further coverage of cross rates, and we'll have less news. For the most part, we'll only have two news stories. Would be the morning bid and then one FX story. If something is pressing, then we can always add one more news story, but for the most part, it'll be two stories. Dollar CAD continues to weaken here. We'll get to that. Once again, if you check the basic technical analysis, the door is open for a little bit further move lower. The only reprieve I think that we can get is if we can get crude oil to weaken. And right now, crude oil, at least on the TradingView WTI, and I just use it as a guide here, is going to be 60.47 right now. We'll take a look quickly on data. We did get Spanish PMIs, which came in a little bit better. The Spanish data actually over the last month and a half or so has been improving. Italy still a little bit weaker here. You can see that. Reuters poll in line with the poll, but weaker from last month. German PPI, man, oh man, look at that. It has really been the woesome one. Prior month was 47.60. They were looking for 44.70. Heck, it couldn't even hit that. It's still dipping further. Greece PMI doing much better. So really the drag on this has been the Germany, and obviously they're considered the powerhouse, but they're the one that's really been weakening overall. It's a bit of a surprise here. I mean, I think some people could reference, oh, there's the China and the US, but you know, that story is long in the tooth. So I don't really buy that. I think maybe they have some very inherent issues because, you know, although other European PMIs are weaker, at least they're, at the very worst, they're stabilizing, if not improving, with Spain, and even to a certain extent, France has done a little bit better, and even Italy weaker here. But over the last month and a half, couple of months, the data for Spain and surprisingly Italy, I remember last month was surprisingly a little bit better on some other data. Let's see, moving in here. Coming into the States, we do have retail sales here, and we're expecting better data. I mean, at least the market in general is expecting better data, and that's why you're seeing this up zip, you know, even here in the dollar yen. And as I mentioned, we'll talk about that, but technically it had finished in a very good level and had opened the door. I put in the basic technical analysis that the short-term momentum had changed. We also have a Canadian PMI, but retail sales will be a mover. So really, until we get past that, you can still see the S&Ps, which are basically on their highs, retain that bid at least until we get there. Let's see. We do have the RBA cash rate, building permits. Let's take a look at one other thing here. Australian retail sales. Now that's going to be the following day, but I'm just looking on here. New Zealand business inventories. later on. But like I said, coming into the States, it's going to be retail sales, which is going to be a mover, a driver, along with Canadian manufacturing PMIs. That'll be at 9:30 Eastern. Retail sales at 8:30 Eastern. We do have Eurozone flash inflation coming up at the top of the hour. Okay, so Germany's still with their weaker data. Let's move this out of the way. So as I mentioned, with the expanded coverage of cross rates, we're going to be spending less and less time on news. Just we'll cover the morning bid and then one news story, and that's it. One FX news story. If there's something else pressing, we may add, but for the most part, it's going to be two stories. Keeping it brief and spending more time on the analysis, or on the technical analysis, I should say. Let's go on and move on to the morning bid. The quest for more Brexit multiple choice for UK lawmakers. The quest for routes out of the Brexit impasse continues tonight as lawmakers hold a run-up vote on alternatives to Theresa May's deal. The two alternatives, with the widest support at this stage, are keeping the UK in a customs union with the EU and having any outcome validated by a second referendum, both of which are an anathema to large parts of May's Conservative Party. This prefaces a possible fourth attempt by the Premier to get her deal through the Parliament as soon as Tuesday, assuming the Parliament Speaker allows such a revote to happen. Whereas Brexit has many in Britain wondering whether to laugh or cry, Ukrainians this week flocked to vote for an actual comedian in the first round of the presidential election. As I said, I don't want to spend too much time on any politics. Raft economic data out this morning is set to show the Eurozone economy on hold, with inflation, unemployment, and manufacturing PMIs all largely flat on the previous readouts. But as I said, the German PMI data disappointed again, and disappointed in a very, to a certain extent, large way. Arguing that Eurozone inflation will take longer to rise, ECB member Sabine Lautenschlager, in a newspaper interview this morning, cited political uncertainties weighing on growth and conceded that the ECB had underestimated slack in labor market, which is a bit of a concern here. Now, China has lifted the mood as world markets kick off the second quarter, with official and private March business surveys showing an unexpected bounce in response to fiscal and monetary stimulus there. Remember, this was almost a couple months back. It was almost like every day, or at least every other day, there was an announcement. The thought process is it's starting to gain some traction now. And I saw where China added on jobs for the first time in March in 5 years. So the thought is, hey, they're starting to turn things around. We also got some good data out of Japan also. So we're getting this, basically to a certain extent a dead cat bounce, but nonetheless a bounce. It says here, Tokyo and Seoul were all up more than 1% in the slipstream. The MSCI All-Country Index was up 0.2%. Its emerging market subset was up for the third day, and the U.S. and U.S. European stock futures are up 0.5%. In Japan, safe haven yen weakened, and dollar yen climbed back above 111, with sentiment aided by some signs of some more progress. That's another thing also. They said that they're looking at the talks between the U.S. and China, which really is getting old in the tooth also, but the market nonetheless is responding to it. So it's really, once again, it's never but necessary you or I think, but how the market is reacting. Is the market positively reacting? And they're making a big deal of it. Not only did they get in some traction out of China, which has been weaker for some time, it looks like we're maybe getting some traction out of that stimulus, but you get the double whammy. Then on top of that, I think it was on the U.S. side, they said the talks were constructive and candid. So once again, it's that carrot in front of the donkey, like Blake likes to talk about. They just keep, going further and further and further. And right now, hard to deny these S&P futures. I mean, they're up there at 28.54, which you've got some resistance there. I did note that in the Asian, session, but once again, with retail sales coming up this morning, they have the chance to kick this up a little bit higher. And as I've said before, the saying about day trading is it's not about being right, it's about knowing where the other guy's wrong. So we could probably still push this S&P to squeeze some of those shorts a little bit further. So just to keep in mind that there might be a little bit more juice. in regards to that. With sentiment aided by the signs of some more progress, if no breakthrough yet in U.S.-China trade talks. U.S. 10-year Treasuries nudged higher, closer to 245, and 3-month and 10-year is back in positive territory. So that's something to give a little kicker there, because remember the yield curve inverted. So that's one of the things that really knocked the stuffing out of the S&Ps and the dollar yen, and right now those things are changing a little bit. So you got some extra momentum that's starting out the week, and as we start out the first, sometimes they used to be as you could almost always look for the S&Ps on the first day of the new month to give a little extra juice. Well, we still have retail sales, so there's a chance we can still push a little bit higher here. Sterling was held up first thing Monday, pushing up close to 131 after quickly bouncing back from a dip below 130 when UK May lost yet another parliamentary vote on a Brexit withdrawal on Friday. Parliament now debates on the indicative votes process. It started last Wednesday with the two most popular options, post-Brexit customs union with the European Union or another referendum. And looking here on the data, we have U.S. February retail sales. Bank of Canada, Chief Polas speaks, so keep that in mind. He will be speaking later on today, so keep that in mind for some potential tape bombs. Aussie dollar jumps on China data, starting steady before Brexit vote. The euro held a three-week low on Monday as improved Chinese factory activity lifted sentiment, with the Aussie dollar leading gains by nearly 0.5%. Investors are scrutinizing economic data this week for signs of economic slowdown in Europe, while key votes on Brexit mean further volatility if sterling is likely. Risk appetite grew after China's official PMI released on Sunday showed factory activity unexpectedly grew in March for the first time in 4 months. Positive readings pushed the Aussie dollar, often seen as an investment proxy for Chinese economic prospects, 4/10 higher. The Chinese yuan gained 0.25% in the offshore trading. The euro shrugged off a three-week low of 12.10 and brushed on Friday. The single currency was up at 12.32. We think the euro is cheap, but unless there's significant reassessment and European growth prospects, then it's hard to see a rally either, said ING. Two alternatives with the widest support in Brexit will be the customs union, with the European Union having an outcome validated by the second referendum, both which are anathema to large parts of May's Conservative Party. The peso gained 35 tenths to 1936, while the South African and the ZAR tacked on about 8 tenths to 14.395 per dollar. And let's go and move on to the news end. So we're done there. Of course, we had the basic technical, so which gives us the outlook for the week. We can see the euro working a little bit higher here, and correspondingly the dollar index rotating a little bit lower. Dollar yen is still holding up above 111. Once again, those retail sales give it that opportunity to probably try and push up a little bit higher. Moving on to the basic technical analysis and review of the week. So it says euro with Friday's poor close remains on target for 11.49. Beyond the target is 10.95. Minor support comes in at 11.93 with initial resistance at 12.60. Market would need a daily close above 12.91 to negate the downside pull. So let's go and take a look where we are with the euro. Well, as I mentioned here on the basic technical analysis, we have 1260 coming up as our resistance. And take this off. And that's what we're going to go with. We're going to go with this 1260. Now there's a little bit of area here, 1253. I think the bigger key thing, once again, is going to be that 1260, and that's what we'll have our resistance at. Let me get rid of this area here. As far as support, well, support's going to come in right there at 12.15. 12.15. We'll see if the euro can add a little bit, but as I mentioned here, and you can see right there that 12.57 we have, but the key on this euro, I don't think the intraday is going to make that much of a difference. The key right here is at 12.60, right there. That's going to be the key thing for now. We do, I guess, for some you could look at that as a bit of an inverted hammer. Certainly look like a very, very weak close. We'll see. I mean, if you think about it, the only thing that's helping the euro right now is we got that good Chinese data, because right now the German data was very, very poor. France continued to weaken a little bit lower. Had a nice little surprise out of Greece, but and Spain also continues to improve a little bit. But right now, like I said, it's going to be all about on a daily close. Look for that 12.60 as resistance, and 12.15. We'll just use that as our support. Well, since the cable level 29.80 remains a pivot, 2 consecutive daily closes below 29.80 target a move to 25.56. But take 2 daily closes below that pivot. We'll look at that. Daily EMAs are on the precipice of a sell signal as the momentum has shifted lower. Resistance is 31.02 with support beyond on a stab below the pivot at 29.28. So let's go and take a look where we stand with the cable. Well, here's that pivot I'm talking about, 29.80. And you can see how the market is really moved in a direction. Once we get past it, it's on the way up. And generally, once we get past it, other than this little step, it's on the way down. You can see that here. Well, we came down and tested that pivot again on Friday, and we're getting a little bit of a bounce. Right now, we're showing here resistance would come in right there at 31.02. Let's take, and obviously the pivot right here, we'll take a closer look at, but this is the key driver right here. 2 consecutive daily close below 29.80. The pivot would target, as we were saying, 25.56. Let's take a little bit closer look on the 2-hour chart. Well, we're pretty oversold. We're very oversold here. Let's give it a little bit of the benefit of the doubt, and it's actually going to be 31.28 for resistance. 31.28. So we might be able to get some additional momentum beyond that. Initially, it's 31.02, but let's give it that extra room because we are so oversold. So you can maybe push these stops a little bit further. It's going to be 31.28 for resistance. Support right there at 30.16. 30.16 will be support. Moving on to the Aussie dollar, and you can see we're still on the bid. Like I said, you got that good China news, and then the talks are supposed to be what they were deemed as constructive and candid. So it looks like we may be starting to see some momentum in this U.S.-China trade talks. It's old as Methuselah, but that's what the market's leaning on. So it says the Aussie dollar remains in a sell mode as 68.80 target looms. Initial support is 70.27 with resistance at 71.35. Two consecutive daily closes above 72.33 will be required to negate the downside momentum. So resistance comes in at 71.35. Let's take a look at what we're saying. Well, we're just about right there at 71.35 here. That's the initial resistance here on the Aussie dollar. Well, and that's looking on the daily. Well, we certainly have that extra momentum, and we've got a week where we could still see some good data coming out of the U.S. So, right now the Aussie got the double whammy. You got the China, some very positive data that came out. Also, I saw where it was FX Macro, the one that noted that we saw China add jobs for the first time in 5 years in March. So for the month of March. So that being said, it looked like all that stimulus that they had that was almost on a daily basis from a couple of months ago maybe gaining some traction. And then when you do that on the heels of what would consider some constructive talks coming out of the U.S.-China trade, and the market appears to be hanging its hat on that and using any excuse to push higher, then we're actually going to give this a little bit of room right here, and it's going to be right there. Well, at least for right now, we're going to go 71.46. We could push higher, but that would be the initial resistance there at 71.46. And we still have it right there, 71.45. We'll move it up a whopping 1 pip. Still bearish. Support's going to come in right there. 70.98. We're going to give them the benefit of the doubt with this extra momentum. I think dips below 71. That might be even a little bit rich there at 70.98. But let's see. Not much. 70.96. So we'll just move just a couple of pips lower. But just below that are probably going to be, they'll look for opportunities to cover if they think things are starting to turn around with the China thing. So it might get some risk going on. Definitely. You're shooting that with the S&Ps. S&Ps now on their highs at 28, almost to 28.56. So let's go and move into the Kiwi, a market that I haven't tracked in a long time. We're starting to get a little extra juice here on the Kiwi. You can see that here. When we push higher, if the Kiwi can push higher, it's been pretty well beat up after the RBNZ. So resistance is going to come in right here, and that's going to be 68.54. It's deserving of a bounce. Support on the Kiwi is going to come in right there at 68.10. 68.10. Not that far off, but once again, I think dips, you could even work it just a little bit higher, a little bit lower. Let's call it 68.08. 68.08, so about 21 pips lower. I think you'll find some support. Once again, with that China news, as Blake feels that you'll see a better impact with the Aussie dollar, but it'll, the Kiwi will also react, and once again with a little bit of risk on. The Kiwi's in some pretty tough shape, but once again, the market's pretty well oversold, so you'll probably see a little bit of short covering coming in on those dips lower. With that, we'll go and move into the dollar Swiss. we got up as high as this 99.70. You can see here, and we're kind of, the door's open for a little bit of a rotation lower. I don't know if it's a whole lot, but let's go right there with, I've got 99.15. Let's take a look where we stand here on the 2-hour. Let's go with 99.18. Well, they did run out of gas at 99.70, and resistance comes in right there at 99.66. And hard to indicate this is bullish, even though from a longer term, we'll take a look at this on the daily. It's still bullish overall. With that, we're going to move into the dollar CAD. So it says Friday, the dollar CAD was on the precipice of a bullish breakout. Once again, disappointed the bulls. The pair closed at the week's low, suggesting a potential move to 32.93 to attract value buyers. Initial resistance is 33.82. A strong pullback in crude would be needed to alter the short-term momentum. Well, we're not seeing it in crude because it's still pushing higher, certainly with the risk-on bit. So let's go and move into the dollar CAD. When you're looking here with the dollar CAD, we had that stab above 34, and it looked like we were on our way to 36.50, if not high, a little bit higher, and we took that dip. And here we are, and like I said, it looked like we were on the precipice of a breakout, and we lost that momentum. And with that strong close, if you look at this, look, Thursday, Wednesday, Tuesday, Monday. So we took out all that and finished at the week's low. So that really puts the pressure on the bulls and opens the door for this market to move lower. When we look at this here, coming right across, you can see where I came up with the 32.93. So potentially this market could move to 32.93. And we're certainly seeing the pressure right now coming in with the market. Now we have, if you look here, some resistance comes in 33.80. And certainly we're opening this door for this market to push back lower. And we can take a look on a short-term basis where a fib would come in. With risk on, that's going to push this crude oil higher, and we're on our highs right now in S&Ps. If you're looking for any kind of a confluence, let's see here. Yeah, 33.27. Yeah, I'm going to go with 33.22 because they'll, probably trigger some additional stops, all these moves down here. But once again, like I said, there's a potential to move to 32.93, but it's hard to go against this momentum when you got the risk on, starting the week off with risk on, first day of the month. S&Ps are pushing higher, which is dragging the crude oil with it. You could still see this market weaken some more. So let's go with 33.22. And the reason I'm saying at that point, that low, now we do have the potential, as I mentioned, to get down to 32.93. But the reason I have this lower, and it's not a whole lot lower, but it is lower, is because I think you could press some stops if you go in and get, into the 30s. Now you dip into the 20s. That could take us right there. I think that'd be a good little value area initially. But remember, there's a potential to get down to the 32.93, which that's what will attract value buyers. On the upside, it's going to be 33.80. Let's go into the peso. Peso had a strong recovery from the week's lows, going from the daily exponential moving average sell to a buy mode. Immediate upside target is 1961. Initial support is 1926, followed by 1920 with resistance at 1951. So let's take a look where we stand here with the peso. Now let's talk about Trump possibly closing the book. I just don't see that as an option realistically, because we get a lot of goods out of Mexico. You do that, you're going to kick the stool out of the S&Ps. That doesn't mean you're going to see some big, huge fall. But I tell you what, that would take its toll. You'd see these S&Ps probably lose a good 75 handles without too much trouble at all. So that's not going to happen. I just don't see it happening at all. So that's like cutting your nose off to spite your face. So I just don't see that coming forth. So we're seeing the market under some pressure. Initial support, I think, is going to come in, as I mentioned, 1926. You can see it coming in right there. Actually, we can even do that right there. Let's call it 1925.8. Initial resistance comes in right there. 1939.2. Like I said, for the, we're looking, there's 59 ahead up there, but if we had the momentum right now, that momentum is not going that way. So once again, like I said, on a short-term basis, 1932.9. Actually, it's a little bit close. It's a little too close. I had that wrong. I'm at 1939 too. 39 right there. 39 2, not 32. Still bullish. Let's go move into the dollar yen. The dollar yen closed at its best level of the week, changing the short-term outlook. The door is open for a challenge of the 2-hour resistance at 1120. Well, boom, that's where we went. Confluencing with 1121 to 61%. A stretch move to 1144 is possible. Support comes in at 1048. So we're looking for potentially a move to 1120. That's exactly where we went to. High was 1118.5, 1119, so off by a pip and a half or so. But you can see here 1120 got this nice resistance coming in. That confluences with 1121 being the 61% of the move from 971 up here to 1214. Look, with this risk on business, we still have the potential to move higher, and that could take us up here to 1144. I believe. Now, the market, if we get a little bit silly, if we do get that China news, and it may keep the market on bid for most of the week, then we could come all the way up here, and actually we could come up here to about 1160, 1170. Now, people probably think, oh, you're crazy, but I'm saying is we did change the short-term complexion on this market, and there's no denying that. Now you got the extra juice with this whole China business, and even the Japan data came out better. But you can see here we finished. I showed you the same thing on the CAD. Well, look here. Look on Friday, Thursday, Wednesday, Tuesday, Monday. You see what I'm saying? We finished at the strongest level of the week. So anybody that went short is underwater. And so they're going to push that momentum a little bit further. It just makes sense because then let's say you just got stopped out here. You're going to say, well, I'm going to add on. It's 20 pips. I'm going to add on. You're probably going to say, let's see how far this market can push. And you can see coming in right here on the daily. That comes in there right there, 11:14, okay, on the daily, okay. And I'm right here. We got this 43 right there. It's 43.7, can't call it 44. But when we look on the 2-hour chart, I think you see it more clearly. And you can see that 1144 coming across. Now that's where if we get some stabs on retail sales and you get a jump, then I think you could fade moves intraday from this area because we'll probably have to come back down to the 20 or the teens, close to 11 if we were to jump up. But as the week winds on, you can still continue to see this momentum potentially move higher on the backdrop of the U.S.-China trade talks might be finally starting to go down to the final stretch. Maybe not be resolved in the next week or so, but looks like there's some light at the end of this tunnel. Then you got the Chinese data. It looks like they're starting to get some traction out of all that stimulus they had for the last couple of months, and even the Japanese data has improved. So now that being said, considering where the SPUs are, we could actually be higher here in the dollar yen. I'm surprised that starting in Asia it wasn't at 1121, and probably if it was responding. That's what I meant to say. Responding to the S&Ps closer to a 1-to-1 ratio, so to speak, we'd probably be up in here about 1135. So we're diverging just a bit because the S&Ps are still on. The S&Ps are on their highs. Yet where's the dollar yen? So that, at least for people that are bearish, that's a good bit of news here. We could be much higher if it was responding tit for tat with the S&Ps be right here around 1135. It's thinking, oh my goodness, we're probably going to make a move up here. Now, any moves that you get jumped up in here into the 30s, mid 30s, a little bit higher, you can take some pot shots. I think that the market will be well deserved at that point. So resistance, we're going to go with coming in and make it even about 1135. Now 1121 is resistance, but I'm talking about some stabs in there if we get jumped. So any moves towards 1135, I think would be a good fade. But the potential, like I said, as the week goes on, we get better data. You got to be aware of that. Support comes in right now for right now. It's going to come in there at 1166, 1066. I apologize. On the short-term basis. Let's go move into the cash dollar index. The dollar index is on track to test weekly level of 97.90, confluence with 97.89 being the 61%. Initial resistance is 97.45 with support at 96.92. Well, it's backing off a little bit. The reason why it's backing off a little bit because we got risk going on. Risk on, which is taking out a little bit of the stuffing out of the dollar index. And we'll probably thinking that they can push it a little bit lower, and that's our initial support. We're going to move this just a little bit lower there, 96.98. Here is 96, and actually it was. We'll go with 96.85. 96.85. That 96.92 is key, but we might be able to goose some stops on the way down. Let's go with 96.85 because we're starting out the month with this risk on. So let's give it a little bit of extra move lower. That's probably keeping the dollar yen at bay. Which probably, once again, probably helps. I mean, if we get good retail news, then and allows the dollar yen to pop up, it might be a decent little fade there. Once again, if we can get it around the 1130s, there'll be a good little move there. But we shall see. Resistance. Well, we had this. Remember, we had that last week. It's some key resistance, 97.28, and that 97.28 held rather well. Okay. The dollar's on its back step right now because of this risk on, so there isn't any reason to think all of a sudden it's going to change. So we'll go, at least on a short-term basis, we'll go with this 97.28 on a short-term basis. And that's bullish. I was moving these around, so that's why it hasn't been range since a long, long time. Dollar CAD overall is still bullish for now. We'll see how things change. Dollar yen has changed now. It's been bullish in a short haul. Let's go and move into the gold market. With the strengthening of the dollar, gold is quickly faded as equities remain strong. The market will now target the pivot of 1267 with a potential move to 1253. Resistance is 1304. Well, let's go back into the gold now. in time, it looks like this is where it's going to go with a little bit of pause because we had a pretty good little sell-off. I thought we'd be able to push even higher, but like I said, with equities have been responding, so that took off the edge here. And then, of course, gold got a little bit of the double whammy. Not only was the dollar strengthening, equities had done better, and that really dropped this market lower. And it wasn't responding, remember, to the better rates. So it really took its toll on this, and I thought we might be able to push higher. I thought we might see equities finally then roll over, but we never did respond as well as we should have with the lower rates. And then as the dollar continued to move higher and euro was moving lower, it really knocked the stuffing out of this gold. I think eventually we can make it down to 1267. A stretch can take us down to 1253. On the short haul, well, it's going to be 1304 right now. We're actually not responding as much as you would have thought, under the circumstances. But even just from a dead cat bounce, I would have thought we would have pushed up in here to 1299, but we'll go with 1304 as our resistance because we have had quite a sell-off. Support will come in right there, 1285. Let's move into the crosses. We don't have a whole lot of time, usually because we start at the beginning of the week with our basic technical review for the week outlook, so it usually eats up a little bit of time. Okay, let's go and move on to the euro pound. Well, support's going to come in right there at that key level right here, which is 85.77. We'll call it 85.77 for right now. It's not that far off. It's only 20 pips away. Thinking they can take a little bit of a stab, just a touch lower. Takes us down to 85.73. Oops, the resistance. On the short-term basis, comes in right there at 86.25. Let's go and take a look at here on the euro yen. Well, we can still push a little bit higher, and the key areas is 25, but we can probably break a little bit higher on here, and some good volume coming in right there. 20, let's call it 25.14. 25.14. Short-term support is going to be right there at 24.46. 24.46. Let's go into the euro odd. Right there at that 57. All right, 57.39. We do have some Aussie data. We can still push a little bit lower. Let's go with that 57.39 on a short-term basis. Resistance will be right there at 58.07 for now. And these are basically just scalp levels at this point. Here in New Zealand, trying to hold that area here. On a short-term basis, I think we still have to go lower here. 64.38. Right there, 64.88. We'll allow them to take out the stops here. So call it 64.95. 30 pips away. Oh, it's still bearish. Let's go to the ASEAN. Obviously, with the risk on, we're getting the extra little bit of a juice here. They can push higher. With this good news, initial resistance right there, 79.40. 79.40. Support, well, filling that gap takes us right there, 78.69. That would be support. Oh, you can see the resistance right there, clear. We'll give a little bit of extra juice there. 45.68. Still got a little run from there, but that would make sense right there, 45.68. Right there, 44.80 for support. Resistance is pretty clear right there. It's 84. Even if you push a little bit beyond that, 84.14. Well, just so you know where exactly where the risk level is, could be 84.15. Short-term support is 83.16. $92.03 for resistance. Right there, 91.16. 91.16 for support. Well, there's the boss charts completed, and we'll go on and let's take a look here. I'll get that posted, and thanks for joining us here with the European crossover webinar.